So today guys is just a small quick video on how to apply your fibs and when to use them and when to reapply new fibs after the fib has been used. In today's example we're going to be using gold because it's the most it's the I would say it's the chart that has the most structure throughout the war and stuff. And it has some efficient moves that we can take advantage of all throughout time. Um Fibs in general, right, is just a measurement tool. So if you get your fib from up here, just place it from there to there. Fibs in general, just a measurement, right? You have this point down here. You have this point up here. That's the 100%. That's the 0%. It measures the push, and then these levels in middle is just the retracement levels, price reversal zones. What is major about this is because you can use fibs to project the market to where it will stop. I'll give an example here, right? Negative 27% or negative 61.8%. There are TP levels. TP1, negative 27, TP2, negative 61. If you're trading structure, so we all should know what market structure is. On an uptrend, we have higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, and higher highs. We have the higher highs, the higher highs, the higher highs, higher lows, higher lows, higher lows. This is just a basic bullish structure right here. This is what you would see in a normal conditioned market when there isn't war, when there isn't all these movements and stuff. This is a bullish trend. And vice versa for the opposite, for a bearish trend, you have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We should all know this, right? Getting the major points of interest in the markets where we find tested candles. These zones right here, you will all find tested candles in a trend. Tested is a concept which we should know from the very beginning of trading, the very start of time. But this is a basic downtrend as well. So in these trends, you can see multiple. This is like a market structure explanation, but in an uptrend, you can see stuff like this where it comes down, makes a higher low, but it makes a lower high. Then it comes down again, it retests this same higher low point, and it pushes up, makes another lower high, and then comes down again. So it's making some kind of descending triangle, but it's not breaking this level of higher low point. So structure is still intact. This can happen and it's very common to see in the market as the market then pushes out of that zone and continues its trend going up. So that would be somewhat of like a descending triangle pattern. These are always, they're so common in the markets, you wouldn't even like realize how many times you do see these in the market. Like, you might be blind-eyed to them sometimes, but it's always great. That's why we have like technicals like trend lines, random lines. Random lines is a trend line that is made horizontal to identify a level of support or resistance. So just in this concept of this trend right here, like if I just write down my higher low points and higher high points. Oops. That's not a higher low, but it's a retest of the higher low, so it's a low. And all of these retests at this level of support are lows. And then once the low gets broken, or when the lower highs get broken, when it's creating lower highs in an uptrend, this can confuse some people because they'll start to see lower high points and they'll think, right, the trend is going to go bearish. But the major point of higher low point hasn't been broken. So the overall trend is still intact to be bullish and to look for buy positions along this support level. If it did break this like major support level, right, now it's broken. You would wait for the retest, and you would find your opportunities to sell on the retest and go down and starts to make these. But that is only if a break happens. Throughout this whole entire higher low point, we've got tested low points. And we've got lower high points continuing to like squeeze the market down. That's a descending triangle. It looks like a triangle. It is a triangle. Take it for what it is. Don't try force your like a bias that isn't valid, you know. So there's a lot of examples. Like in an uptrend, there could be like consolidation, makes a higher low point right there, breaks out, makes another higher low, and then it continues up. So this level would be the major level right there, and the higher high point right here. Once it broke out, you can continue the uptrend. Or to even make it better, just place the level of resistance where it touches it all the times right here. Then it breaks here, it retests, and it pushes up. So there's multiple scenarios for a continuation of a bullish trend. With fibs, we can use fibs in a market condition to project these patterns as they're playing out. Say if we got this big consolidation, then we have a higher low point right here, right? From the previous low, from the previous higher low point to the higher high point. That's our fib level right there. So we've got point A, point B. Have point A right there. Have point B right there. So that's your fib placement. All we're doing now is measuring how far it comes down until it reverses. In this instance, it tapped the 61.8%, but it closed on the 50%. So that is like it's a confirmed. Inside of this area, you would see a break of structure from the sells to the buys, giving us our buying opportunity at the 50% level. Now we ride this trend out until it hits our TP1 level. Once TP1 gets hit, that fib is completed. A and B is completed. It came down and it retraced at this level. So A and B is completed. We can delete these. Since we got our target up here, TP1, let me mark it off as a green box. TP1 right there. TP1 was hit with the market structure. We delete this Fibonacci retracement because we no longer need it anymore unless we're looking long term at TP2. Say this is based on the 4-hour structure, so we delete that. Our new fib placement will be point A, this retracement low, to this higher high near the previous take profit level. Get our fibs, point A to point B, just drag it out. Now as you can see in this structure itself, we have point A and point B. Point A never broke. It never ever broke. You can draw a random line, which is a trend line gone horizontal to show a level of support. That's our random line. It never broke. It continued to push higher and higher. Right here, we have our first higher low point area. Right here. Market then reverses, right? And it pushes up to TP1. That's breaking out of the consolidation range. So our next TP got hit. Right here. This TP got hit. What to expect when a TP gets hit is to see some sort of little pullback, retesting point B of the previous structure, and then it should continue up. That's the bullish trend breakout of consolidation pattern. Once this consolidation and TPs get hit, etc., just like the previous example from point A to point B here, hits the TP here, we delete this fib. So now we've got this kind of structure, and we have a TP hit right here, also a breakout of the consolidation range. You can use another random line for that level of resistance that I broke. And then we got the higher low point retest. So this is, remember, our TP level right here. We hit TP right here. So we can use new fibs. From the higher low point inside the consolidation to the breakout higher high. And we in this fib example right here, we got a 38.2% level. That's a very, if it does reverse off this 38.2, that's an aggressive push. More like if it came down to the 78.6, you would see something like this, right? Say we got our push up, and then the push down came to 78.6 or 88.6. The trend you would see on this kind of retracement is very slow, in the sense that you'll see pushes up, you'll see pushes down, you'll see pushes up, you'll see a trend within a trend. Until the take profit TP1 and negative 27% gets hit. This is what a 78.6% retracement would look like. Point A to point B. We got a 78.6, and it's a slow trend within the main trend. See this push from point A to point B? That's the main trend. It's a bullish push. This is just a retracement we're measuring. Based on these price reversal zones, you get either a slow trend like this, or on the 38.2% like this trend right here, where we're catching the breakout retracement, 38.2. It won't be any of these slow trends right here, because this is a 78.6% retracement, all this right here. At 38.2%, you'll get an aggressive push straight to the next TP zone, like that, right there. So straight to the TP, and then another higher low point. Once the TP gets hit, like I've been saying in the past structure we've been analyzing, you delete this fib. Got our previous TP here, got 38.2%. You can mark like higher low points off with like a swoosh. So this is the next leg, bullish leg, that we have to measure and retrace. So we got our point A, point B, comes back down 38.2%. And again, that is a clean push to the next TP zone. In fact, it actually broke straight through all the TPs, and we got TP2. More of a longer term trend that we're capturing simply by just placing the fibs correctly. Every time the TP gets hit, you will see some kind of retracement. In this scenario right here, where we got the first 38.2% retracement right here, and the second 38.2% retracement right here, you can expect to like take profit at your TP1, but let a runner run. Say if you enter one lot on gold, take out 0.5 lots at TP1 and let 0.5 lots run. In this specific scenario where we're getting multiple 38.2s in a row, that's what will give us the strong trend on the 4 hour. Because if you would to zoom out to the daily time frame to look at this consolidation and the push and break, that what we're seeing on the daily time frame, it's this consolidation range right here on the daily would just look something like this. That's what the daily time frame would look inside of all of this 4 hour structure and the 38.2% TPs, which, as you can see, if you were to use your fibs on the daily time frame, it will work still, but you'll be waiting much longer for entries and your stop loss would have to be much wider. That's why we use the lower time frames for like the precision and analysis. Now every single pair, like gold, USD JPY, US 30, has its own time frame that looks the clearest on. For gold, I do like the 4 hour for the fibs, technicals, the structure. and the 1 hour. So the 1 hour can also be very good on gold and precise to look for these trends off of. If we get a steep retracement to the 78.6 or 88.6, you will see one of these slow trends, but it gives us the best risk to reward because we're close to the 100%. So if you were to enter a trade down here, say once you've seen the reversal off of the price reversal zone 78.6 and the pullback, you enter a trade right there. Your stop loss, your stop loss would be at the just below the 100% there. So it would be at the like for the trend, for this bullish trend to be invalid, it still has the breathing room to come to a 100% before being broken. But say for like a 38.2% on the same time frame, if you were to enter here, for the trend, like breathing room is what I call it. Like it's the market's room to breathe before the trend is even invalid, would be below this 100% at the 110, 120% levels. Now you wouldn't base your stop loss at this big ass stop loss if you're entering at these zones. Why? Because you wouldn't enter trades on the 4-hour time frame to capture this TP level. You would zoom into like your breakdown time frame, like 30-minute, 15-minute on these 38.2%, and you would see that you'll get a good stop loss just below where it rejected the price reversal zone, which you could use like a 10 point stop loss, sometimes 12, sometimes 15. But that risk to reward to TP1 is efficient enough. Like that's 128 points. That's 128 points of gold, which is an insane trade. It's a 1 to 8 or a 1 to 8.5 risk to reward right there, and it slaps it straight away. And you can continue to do that as the trend progresses. You know, this we got our TPs, we got our trade, we're happy with our money. Delete the fib. Get the new fib. Place the new fib point A and place the new fib point B. And right here we got a 50%, and it stops at the TP1. 50% is more neutral. It's like 50% buyers, 50% sellers. When there's 38.2% tells us that there's still more buyers in the market than sellers. 23.6 is more of like a continuation level to where it's like there's so much buyers, not enough sellers. So you will see in like you won't see as much you won't see as much structure. You'll basically see some consolidation at the 23.6 if it came down to it. Like you would see the leg up, you would see 23.6. It looks like it's going to go up, but it'll consolidate a bit more until it gives a good bullish confirmation off of this level, and it will shoot straight up. No questions asked. That's usually the 23.6 continuation level. So I'm going to show you some examples now of the Fibonacci's inside actual candlesticks. So let's do that right now. We start off in the 4-hour time frame just to see the overall bias and structure. So we'll do like just this drop right here. I'll mark off the drop so we ain't confused about nothing. So this whole entire like structure right here we see on the 4-hour. There's stuff we can work off of here. We can't necessarily place like fibs on the 4-hour because there's not enough detail. There's a lot of wicks, there's a lot of dojis. So I would use the 1 hour. Remember what I said, like you can use the 4-hour, the 1 hour. Well, specifically for me, I enjoy looking at gold on the 4-hour or the 1 hour. Like a 4-hour example of me choosing the 4-hour time frame for fibs and stuff would be in like a nice bullish trend. A nice bullish trend like this in the past, where we had point A, point B all the way up here. We got a retracement of 61.8%, and it was a nice slow push. It's an aggressive push, but it's not slow. Like this, the 78.6 is slow. The 61.8% is more aggressive. You won't see big pullbacks, but you'll see a more of aggressive push to the TP level up here on this 4-hour example, right? See how like it hits the TP? It's not as fast as like a 38.2. Let me show you what a 38.2% retracement looks like. This is a perfect 38.2% example right here on the 4-hour time frame. So we have our point A, which is at this bottom wick. Point B at this top bullish wick right here. And just drag it across. The retracement came down to a 38.2% level. We see a slight bit of consolidation, but it's not breaking the main support level at this 38.2%. It never broke it. It wicked it, showing some bearish candles, but that's what we ignore when it comes to, oh, newfound support, 38.2%. That's a higher low point right there. So what we're waiting for now is confirmation, which could be some of these bullish candles right here. You can mark off the opening of a bearish candle like this right here. Let's put it black. So this like bearish candle right here. Once you get like a bullish engulfing or a variation of some sort that engulfs the bearish candle right there, and for extra confirmation, just that bearish open as well, you can definitely confirm the 38.2% is holding, and there's now more bullish engulfings and bullish confirmations to TP1, which is right up there. This 38.2% example is actually very nice. So in this example particularly, I'll use the replay tool just to show you like what I'm looking at here. So this is what I'm looking at right here. Got the fibs. Point A, point B. Point A and point B, higher low point. So let's zoom in to the 1 hour at this 38.2% level, see if we can get some bullish confirmations here. So there's the 38.2. As you can see, price is holding. Price is holding. It's starting to make higher low points right here. These higher low points are higher than these lows. Same with these higher low points. So you don't really like miss the opportunity to get into some buy positions here based on the structure. We can mark off the open of this bearish candle right here. So just before, you see the MAs are kind of mixed in between the chart. It's not ideal to take any trades when the price is below the market. It still shows bearish momentum. So when the momentum shifts bullish, like in this area right here, where we see this bearish candle open on the 1 hour, this candle right here, yeah, it closes above it, yes, but it has some wick on the top of it. So this next candle right here, it's a very strong bullish candle. And mark off the close of that bullish candle. And I'll use replay tool again. I'll just zoom into that candle that I'm talking about. So once this 1 hour candle closes, this is our confirmation to get in off of the fib on the 4 hour on the lower time frame analysis. So we have the 1 hour close right here. We can zoom in, say 30 minute. Is that looking good? Too many wicks. What about the 15? Still not enough structure. How about the 5 minute? 5 minute looks a bit better. Prices above the moving averages. So the 1 hour close, say at 9 a.m. right here, and then the next confirmation candle closed at 10 a.m., which is the next candle after this 5. So let me play out that candle. See that candle? After we were looking on the 1 hour time frame. So this is a nice strong bullish candle that we see on the 5 minute. Once this closed, you know, you obviously like missed the entry there because we're at a higher high point right now. So you would let it play out until we get another higher low point. So we're getting some strong candles right here. We have mark off your level of support. This level of support is not breaking. Then we have this candle right here, which is the main bearish push for this whole entire area. So if we get a close above this area right here, we're after pushing out of the higher time frame 38.2% down here. But we missed these initial like higher low points already, so we've got a level of support here. Just measure this trend with the fibs again to see what kind of retracement we're at. So this is more of a 23.6% level, and as I said, you would see consolidation at 23.6 until confirmation. So let's see if we get a candle that closes above a bearish open, which would be a bullish variation. And we're going with the trend, not against it. Candle still has a lot of wick on top. Alright, this candle right here is efficient enough as it closes from this bearish push down to the 23.6. That's the open of the bearish flow. Now we got bullish flow. So you could necessarily like enter a trade right here. Your stop loss could be below this previous low for about 10 points right there. 10 points. TP, not based on this lower time frame fib. We're just measuring this level of support on the lower time frame right now. But our TP would be up here still originally at the 4-hour fib. So it's a 1 to 5.2 risk to reward. Now let's just see how this plays out. So we're back in a little bit of drawdown right now. Okay, so as you can see, that trade, it lost, but there is losses in this game right here. When we're working off of a 4-hour fib, we need like a 4-hour confirmation candle, which would have been these two candles right here. So the pullback is this candles we're seeing right now. And then we got a bullish engulfing. So we took a loss here, preemptively entering the market. MAs are right below it as well. We got a bullish engulfing right here. We could enter another trade right here. 10-point stop loss. And we're still aiming for the same target at the negative 27%. Staying disciplined here. So you could have been a bit conservative there and closed out on that wick, knowing that you're just right at the TP, but it hits anyways. So these extra few candles hits the TP anyways. So why I lost this trade and why it's a losing trade in general is because I was stuck on such a low time frame like the 5-minute. If we zoom back into the 5-minute and see what I was trying to aim for here, you can see like I was using like a 5-minute entry criteria, but it was also at a 23.6 on the 5-minute. So like this 5-minute isn't efficient enough. You would drag this out and just measure this 5-minute trend, and it comes down to 78.6. Still didn't break this 5-minute structure, so that's why I entered off of a 30-minute bullish engulfing at the bottom here, and that's how I won this trade in specific, because I'm sticking with the bullish trend from that 38.2% retracement from earlier on. So the market, it maintains until it hits that TP, and let's just see what happens after that. Let's zoom back out again because the 5-minute is kind of chaotic. See if it goes TP2, if anything. It's about to hit TP2. There we go. See, it was TP2 is like in sight. So you could have been greedy and just hold from this entry all the way down here. Or you can be conservative, right? You enter one lot down here, take out 0.5 lots here, and let 0.5 lots run, and you'll see like bullish market still does maintain. Say our next TP is up here, which just got hit. This is our TP2, literally just got hit right here. And this is based on the 38.2% fib, point A, point B, 38.2%, higher low points maintaining. Even though we got a big pullback, that's a healthy pullback in a bullish trend to the MAs. And then it hits the second take profit. So that's like a very, very good example of a 38.2%. But let me just, let me leave this real quick. Let me remove drawings. So this is this week on gold. And as I was saying, there's a lot of candles here. There's not enough detail. Like if we use the 1 hour time frame, it's much nicer, right? You can see your lower high points. You can see the support breaks and all that. We can even place some kind of trend line here. Just like that. Could use it from here. Let's see which trend line works the best with price. So from these wicks to these wicks, this works nice with price right now. So for an example, right, Monday, the start of the week, this is all Monday's price action right here. If we notice, there's a major level of support right there. But the lower high points are getting more intense, and we're touching the support more and more and more. Once it broke this support, so first we need the confirmation, right? That's our confirmation, bearish engulfing. That could be the start of our point A on the fib. Once price makes a new lower low, price made a new lower low there. From the lower high to the lower low, place the fibs. And this is the exact example I was going through on the charts in the Discord server. We got a 23.6%. Now if you were stuck on lower time frames, you could probably see where you're going wrong here, trying to enter trades on dojis and all sorts of stuff. But what you could do is mark off the level of resistance here, and then you could be tracking it on the lower time frames, like the 15-minute or something. But if, as you can see, like the MAs are still pointing down. Right here, it's in the middle of the MAs, so it's some consolidation. Can mark like the little higher low points it's making in the downtrend, and once it breaks out of this trend line, a nice bearish candle right there. Short position right there on the close. We're take profiting at negative 27% down here at the higher time frame. This is the higher time frame right here. So it's a higher time frame fib, 23.6 TP1. Drag that across, and it hits that. That's a nice 1 to 3.73 risk to reward, which is pretty good. I mean, 20 points is too much. Let me adjust that a little bit to what it should be. Our stop loss should be just above this breakout candle. So 10, 12, 13 points seems just about right. So 13 points to TP1, that's now 5.54 risk to reward. Perfect trade. Once it hits the TP, you can see pullbacks, right? Pullbacks into a major pullback. So we got this and then a higher low point. This higher low point holds and it doesn't go lower. So we get a push up. Got another higher low point. Pushes up again. Now we're at a higher time frame level of resistance. So from here we need more bearish confirmation on a higher time frame because it's a higher time frame level of resistance. Let me delete this, clear up the chart a little bit. So what we would need is a nice strong bearish 1 hour candle close to flow with this market again. I wouldn't use this candle because it's in the middle of the consolidation. I would use the bullish flow right before the consolidation for the confirmation. So I draw a line right there on the opening of the bullish candle. And once this active candle closes strong beneath this black line with not much of a wick. Well, it can be a little bit of a wick, but you don't want too much of a wick. It closes in 28 minutes. So let me see what the 30-minute is saying. Yeah, still we need a 1 hour or a 30-minute close beneath this black line. So you can always right click, add an alarm at that black line. See what price does when it comes down to this black line. Does it break through? And then wait for the candle close. I can't like say that enough, like wait for candle closes. Some people can't read. Wait for candle closes. Once the candle closes beneath the black line, you can then zoom in, lower time frames. It will look something like this. A push down, you wait for the retest, and then you sell. You get in on the bearish structure, not the consolidation, not before it. You don't sell just because it's at a level. You sell when it breaks the level and retest the level as confirmation, and then you sell. When this TP got hit on our previous fib, it was at 23.6% level. Go back higher time frame, show you that. Point A to point B, 23.6. So you adjust the point B down to the new low, and you measure this trend. As we were talking about down here, we were saying major pullbacks. So we measure the major pullbacks. So for right now, we are at a 61.8%, similar to the example that I showed you in the ideal bullish 4-hour trend back in the past. It will be an aggressive trend to TP1 eventually if we do get that confirmation. Which TP1, our next TP level, will be down here. This will be our next TP level. Mark off some exhaustion zones to where you could see some struggle at, like this bearish candle that had some wick at the bottom. That can be an exhaustion zone, so I'll put that orange. So once we get confirmation up here at the PRZ level, we will 100% see some struggle down here at the 0%. We could either see the struggle or we could see a breakthrough straight to TP1. But it won't be as clean as a 38.2. It will be more like this. It will have little trends within a trend. As it pushes down and breaks these PRZs, it might struggle here, but eventually breaks and then hits TP on the 1 hour time frame. So you could be waiting a while, you know, these are all 1 hour candles. Like this push up into the PRZ is 1, 2, 3, 4, 5, 6. 6 hours of bullish momentum on a lower time frame. But on the higher time frame, we're seeing bearish momentum still. So we could flow with the bearish trend once we get the confirmation of it, and we can hit TP1. We can have that in mind. So that's pretty much it, guys, for how to use fibs when it comes to understanding market structure and fibs. Especially on gold, like you have a lot of structure everywhere. You have higher low points. You have a lot of fibs to place and consolidation ranges. You know, you'll get used to it over time, but always make sure to, like, if you can place a trend line, try to place a trend line just to track it. Just to track the momentum and see where it's going. So this was a bullish trend, right? You could have been placing fibs, taking positions at PRZs with confirmation, but eventually when it broke this trend line, you could have been having patience. Mark off your exhaustion zones to see where struggle could be for sells, since it broke already support. So this is a nice exhaustion zone up here, and it never broke any higher than it. It went below a middle or high point, which is where we placed the trend line from this point right here. The trend line was placed right there and it was guiding it down. So it went from bullish to bearish, and right now, let me see. I just got an alarm at the level that I said you could place the alarm at to see how price is reacting to it. So we're wicking it out a small bit, but there's 8 minutes left. Remember, wait for candle closes. Just because it hits your level doesn't mean sell. I see it time and time again where it hits a level people sell because, oh, it's going down. No, it's not. It's not going down just yet. It needs to break through. And you need that little retest and then a bearish engulfing or a bearish variation of some sort, and then so. Don't just sell at 61.8%. You need bearish confirmation, bearish structure. Because this is 6 hours of bullish pressure. So you need at least an hour's confirmation of bearish pressure before even thinking about selling again. So yeah, guys, let me know what you think about it in the Discord chat. And yeah, I'll be posting more videos like this. It's not a long video, but I'll be posting more videos like this as the markets progress and as things change. It's been quite rough with the war lately, so structure has been a bit messy, I can't lie. But knowing how to place your technicals can really help you understand what's getting exhausted, where price is struggling at, and how to measure the trends within trends. So yeah, I'll see you guys on the next video. Peace.